All right, man. Day 6. It's time. Yeah, man. I'm gonna be honest. I've been feeling a little self-conscious, so don't make fun of my weight in this video or anything like this. Okay, my shirt's off, but it's because I just worked out. I feel like these aren't pecs anymore. I feel like they're man tits, and it's making me not feel good. So it's time, man. All right. But let's get into day 6. It's time. You know what I mean? I've been feeling really good about this mentorship so far. I feel like I've been covering things the way I want. And today is discussing time. How to utilize time in the marketplace. So pay attention. It's going to get saucy. Tight shit. Man tit reveal now, big boy. Can I tickle you? Edging right now. Yeah, so I'm going to go ahead and put my shirt back on. All right, so time. There are 3 things that I want to cover when it comes to time. One is going to be kill zones. Okay? Can't wait to watch on YouTube and set up shop. Yeah, so I'm done reading chat. First thing I want to talk about is kill zones. The second thing I want to talk about is macros. And the third thing I want to talk about that's a little bit more complicated is open high low close and open low high close. Okay, so we'll start with the kill zones. Kill zones and macros. Oh wait, no, we'll just do kill zones. Okay, so your kill zones are basically just going to be the prime time for each trading session. If I'm being honest, I don't know if Asia session has a kill zone. I don't touch Asia session, so if there is a kill zone for Asia session, we're not going to talk about it. We'll talk about the London kill zone and the New York kill zone. All right, the London kill zone is. Wait, I'm lightweight blanking on the London kill zone too. It's either. Hold on, because I know the London kill zone for PST. I need to transfer it. The kill zone, from what I remember, used to be an hour before London session opened, and then an hour into the actual open. So it's 2 hours. So London session opens at 3 p.m. or 3 a.m. EST. So kill zone should start at 2 a.m. EST, and it should run to 4 a.m. EST. Okay, this could be wrong. I'm going to be honest. I doubt it is, but it could be. So you can fact check me on this. I'm going to be honest. I just don't care because I don't trade London. And if you're watching this mentorship, you're not going to trade London either. I'm going to be honest. It's just not going to happen. But so you can go ahead and fact check me on that one. But New York kill zone is 8:30 a.m. EST to 11 a.m. EST. Why is that the kill zone? Because 8:30 a.m. EST, it's an hour before market open. No, that's not the kill zone. That's just the AM session for London. 2 to 6 isn't even the AM session for London. But it doesn't matter. That's not it. But the reason why the New York kill zone is 8:30 a.m. EST to 11 a.m. EST is because 8:30 a.m. EST is the start of New York pre-market. It's an hour before market open, but it's the start of New York liquidity being put into the market because it's the pre-market. 11 a.m. EST is the end because that's when London session ends. So London session and New York session overlap each other until 11 a.m. EST. So that's why that is the kill zone. That is because there's both sessions worth of liquidity, and the New York session pre-market starts at 8:30. So that is the AM session kill zone for New York. There is a PM session. There's a PM session kill zone, and that is just 2 p.m. to 3 p.m. EST. If I'm being honest, I know there's something special about 3 p.m. I think it's something about when that's when the bond market closes or something like that. I'm gonna be honest. Understanding the logic behind it is always nice. It's not really necessary. I've operated without knowing the logic behind the kill zones outside of the New York AM session kill zone, and I've been fine. You just need to know when the time is. Like I said, fact check me on London. I don't trade London, so I kind of forgot, and I didn't even realize I forgot until we started the session. So, but like I said, I don't trade London session. You're not going to trade London session. I'm also pretty sure that this is correct. Like, this is accurate. But fact check me just in case. Okay? So, these are your kill zones. These sections of time is when price action is going to move most efficiently. So, the section of time between New York AM session and New York PM session is lunch. So, typically, price action isn't going to move as efficiently during lunch hour. So, realistically, you should just be trading at these times. These are the times that you should be looking to be in the market. We can show examples of this real quick. I'm going to show examples of, I guess I should be responsible and show examples of all. So let's just do a quick example of London. Doing them as on the dashboard. Wait. Hold on. Because the London session open changes, so I could actually be tripping. Let me see. Nope, opens at 3. Okay. Yeah, like I said, fact check me on London. I'll be honest, fact check me on that. I should be right though. But price got pretty acky at 2 p.m. or 2 a.m. So we're moving kind of choppy, and then starting at 2, we're getting displacing candles to the upside. It does end up getting choppy, but realistically, we're trading a U.S. pair during London Open. So it's not going to be the cleanest price action. But you do notice at 2 a.m. is when we start getting those displacing candles to the upside, right? So let's go look at another London session real quick. I'm only going to show a couple of the London session because, like I said, I don't trade it. It doesn't matter that much. It won't matter much for your trading. So let's go 2, 4. Okay, we're chopping, and then within the 2 to 4 time frame, that's when we get the displacement to the upside. Displacement, you can only displace so much during London session when you're trading a US pair. But yeah, I mean, like I said, bro, I don't use it. I'm just talking about it because I feel like I should, but this series is more so to talk about the things that I actually use, so I'm not going to put too much emphasis on it, but it's there. I use mainly the AM session kill zone. I don't trade PM session anymore, but when I did pay attention to the PM session kill zone. But let's mark out a couple examples of the New York AM session kill zone. Look at that. Okay. So we're choppy, and then whoop de freaking do, right at 8:30, we start to get acky. You can see the difference in the candles. We get acky right at 8:30, getting strong volatility to the upside, strong volatility to the downside. Big, ginormous move for AM session, ends pretty much right at 11. We did end up getting reversal, and we did maintain good price action, but I mean, look at when the move stopped to the downside, right when we hit 11, you know? So you can see the change in volatility from prior to this section of time and during the section of time. It's very apparent. So let's go to another day real quick. This was yesterday. I got clapped yesterday. Price action is not normally this atrocious during this section of time. This was like a very one-off scenario. Price action was really bad this day. So we didn't get super active, but you can still see, like, from market open forward, the change in volatility. Like, these candles are way more dynamic than the ones prior. But obviously the main move ended up happening after. This is the kill zone, but it's still like possible for there to be decent price action up to 12 p.m. because 12 p.m. is when the lunch hour starts. But another thing, this is kind of complicated, so you don't really have to pay too much attention to it. But lunch hour is expected to be the section of the day where price gets choppy. But like if you have a choppy AM session, then the odds are that you won't have a choppy lunch hour. and that just makes sense. You know what I mean? But don't overcomplicate yourself on that. Just focus on what the fundamentals are. So let's go to another day. 200 miles on the dashboard. Okay, here's a cleaner example. Pretty choppy. We're moving, but pretty choppy. 8:30 opens. All of a sudden, we're getting dynamic moves to the upside, and then a really dynamic move to the downside. And when does that move to the downside pretty much come to a halt? 11 a.m., the end of the kill zone. Like I said, we did maintain good price action after, but that move stops pretty much like right at 11. Lunch, now we're talking. Okay. All right, but you get the point. Okay, let's look at a couple PM sessions, 2 p.m. to 3 p.m. I'm not going to lie, PM sessions lately haven't been phenomenal in my opinion. I haven't been loving it. But, I mean, today we were just active all day. Today's price action was insane. So there's not going to be a huge difference from prior to 2. But you can still see, like, dynamic price action during this section of time. It's just we've just been trending up all day, so you can't really see the difference. But you still kind of can. Like, these candles aren't as big as the candles that happened during the section of time. But today was just a crazy day, so. Let's go to the previous day. And then, of course, this day is the day it's freaking choppy. But, I mean, this section of time was choppy, but another thing to keep in mind is that this was the day before CPI. So the PM session before a major news event is expected to be choppy because we're saving the volatility for the news event. So this isn't necessarily surprising. So let's go to a better day. I like cash, money. Another pretty slow day, to be honest, but no news Monday. I mean, you can't force volatility out of a kill zone on a day that's not expected to have volatility. But, I mean, you get the gist. Those are the time frames that are recommended that you go for, that you focus on in the trading. I personally think the AM session is more often than not going to be cleaner than the PM session, and you saw it just now. Like when I showed you the kill zones from the AM session, they were a lot cleaner and a lot noticeably more dynamic than prior to when it started. You know what I mean? So me personally, I think the AM session price action is always going to be a lot cleaner. I only trade the AM session. So it's not too complicated. Just trade within those time frames. I wouldn't recommend trading outside of them. I would say that's probably like the least important thing that we're going to cover. It's definitely important, but out of everything we're going to cover today, it's probably the least important. Oh, the use of New York Open in PM session? I'm not sure what you mean by that. Yeah, we're going to have a lesson about news. I mean, I subtly talk about it throughout the entire mentorship, but when we talk about building a weekly outlook, it's going to be talked about a lot in there. And daily profiles. Okay, so that was kill zones. Kill zones aren't anything monumental, but they are something you definitely should be paying attention to. So now, let's talk about macros. Macros are a lot more important. Ariana, I think you're speaking ahead. Like you're talking about something that is a little bit more advanced that I've talked about before. And it seems like you're kind of confusing it, but we are talking about it in this class. When we get to the open high low close and open low high close, I feel like that might make more sense out of what you're asking. So ask me again at the end if it didn't clear it up. Okay, macros are going to be the last 10 minutes and the first 10 minutes of every hour. So the AM session macro, and this is probably the only macro I really pay attention to, is 9:50 a.m. EST to 10:10 a.m. EST. More often than not, and when I say more often than not, I literally mean outside of like 1 or 2 exceptions, I don't trade prior to 9:50 a.m. Macros, these 20-minute pockets of time, are when we will typically start the aggressive move to either fill an imbalance or take liquidity. This is usually when it happens, and it's very noticeable. Like, especially this macro specifically, this is the macro that I pay the most attention to for a reason. If you're entering a trade prior to this, it's typically going to get, like, if you are entering a trade before this and there's a decent setup, and then the macro forms, it has to be like order flow wise, which we haven't talked about yet, but we will. The only way that you enter a trade before this macro is if, like, order flow wise, it's literally impossible for us to get to your stop loss if you're right about the direction. That's the only time that I ever trade before the macro. Outside of that, you should be waiting for 9:50 a.m. every single day, in my opinion. It'll keep you safe long term for sure, if you just make it like a standard rule. But yeah, like I said, it's the first. I guess I'll write it down just so it's clear. So obviously, combine this with the kill zones. The most effective macros are going to be the ones that are within the kill zone. But this one right here is the one that I pay the most attention to. Okay? So I'm going to show you an example of the 950 macro specifically because it's the most important. You enter trades in the macro. It's preferred if you can catch an entry during the macro. But like being in a trade prior to a macro, like if you're in a trade prior to like the 10:50, 11:10 macro, that's nice because your trade will typically start to deliver as we enter the macro, you know? Simply put, the macro is just a section of time where we will aggressively go fill an imbalance or take liquidity. Whether you're on the right side of the market or not, who knows? That's just what happens during that section of time. Okay, so let's look at the 950 macro for the past couple of days because that's the most important one, in my opinion. Okay, here's 950. Here's 1010. Another thing that happens in a macro is accumulation as well, but that's way more complex, like to the point where I'm not even going to talk about it because I don't even fully understand it. But it's called, what is it called? Not time manipulation, but something along those lines where like the purpose of the macro is for us to accumulate to not waste time. I don't know how to describe it. That's why I'm not going to tell you about it. But like sometimes a macro will be slow like this. And also, I'm going to be honest, when I first learned macros, I was confused too because it's like it doesn't work perfectly every single day. Like it's not like every single time we enter that pocket of time, we're just going to immediately go. But it is something to watch. You know what I mean? So like when you see something like this, like don't be like, oh my God, macros don't work. It's just sometimes it's just not going to be perfect. And like I said, there is a part of macros that I don't really understand and a lot of people don't understand where it's like it's not time manipulation. I'm forgetting what it's called. But like we accumulate on purpose because you notice how here we accumulate on purpose, or hypothetically we accumulate on purpose. And then right after the macro ends is when we go, you know? So it's just something that I don't fully understand, so I'm not going to speak on. But today isn't like the cleanest example ever, so let's go to a different day. Or we can check out some other macros first, just in case. Let's see. So 1050 to 1110. So we did have this dump, but from there it's pretty choppy, pretty slow. And then within this macro, boom. Really strong candles. The strongest candles we've had until this point. So boom, delivery. So that's a good example of a macro. Let's find another one. Here's another macro. I wouldn't say price action prior to this was slow, but you can see as soon as the macro started, we moved to fill this imbalance and then had the huge dynamic move to take this liquidity and obviously start taking this liquidity. And then right when the macro ends, what happens? Price gets really slow and choppy. Okay? So let's go take a look at other days because I want an example of the 950 macro. I like cash, money, money. Yeah, I mean, we saw this in the kill zone example as well. It's just slow. It's just choppy. But this is another one of those scenarios where, like, we chop for the macro, and then right when the macro ends, that's when we get the move, you know? So that's, like I said, I can't speak on it because I don't fully understand it, but that is another part of a macro that does happen intentionally, you know? So, but what you really want to be looking for is the super dynamic moves and things like that. That's the fundamentals. Let's go to another day. Or we can look at more macros from this day. Let's see. This day was weird, though. This is a very weird day. It's the day before CPI. But we can double check real quick. Yeah, I mean, obviously choppy. You don't really need to look at that. I mean, you already see it. The candle that the macro started on gave us the dynamic move. So prior to this candle, really slow, small candles, and then right when it starts, the entirety of the macro is active, and then right when the macro ends, we're back to really small candles. $10 minutes before and after every hour. Yep. And like I said, you want to pay a lot more attention to the ones that are actually in kill zones. This exact sentence describes macros. Macros are a pocket of time where we will move more aggressively to fill imbalances and take liquidity. That's it. So are the 4-hour ones going to be more aggressive? What do you mean? There's no 4-hour macro. Well, we're not there yet. That's not a macro. That's open, high, low, close. We'll get there. Bro, actually, like, where are all these flies coming from? I don't get it. Yeah, and today, after I finish talking about macros. Yeah, so here's another day where, like, we're pretty choppy, and then right when the macro ends, that's when the move starts. I'm telling you, it's intentional. I don't fully understand it. Like, if we accumulate the entirety of a macro, I mean, I don't know. For me, it's like macros, they're important. It's good to know what times to trade. It's good to know what time we're going to be moving more aggressively. But, like, it doesn't change my trading much. The only thing that time has changed my trading for is the duration that I trade AM session for and the time that I start trading for the day. I don't start trading typically before 9:50, and I don't trade outside of the AM session kill zone. That's what it's done for my trading. It doesn't change whether or not I'm going to actually enter a trade, none of that stuff. So it's not like crazy important, but it's definitely important. But yeah, like I said, this is another example where literally, I mean, unless we push on that last candle something important, no. Like right when the macro ends is when the move starts. So I don't know. I feel like it's intentional. Bro, there's like 7 flies that go around my house. I have to kill them one by one every single day. You guys don't need to worry about the exceptions right now. There will be a day. But right now, you don't need to worry about exceptions. You need to know the fundamentals. Okay, let's look at this day. I mean, it's a Monday, so it's going to be pretty slow, but Let's take a look. Jesus, bro. Oh, we just looked at this. Oh, wait, I'm a tweaker. I guess I'm drunk. All right. But yeah, let's look at one more day. I like cash money. Okay. So here's a good example. So within this macro, we moved to fill this imbalance, mitigate this order block, and then aggressively moved to take this data low. Those candles are dynamic, they're aggressive to go take this data low. And then obviously we have this here as well, which we booked after, but like news low got booked aggressively during the macro. That's pretty much like what we're getting at when it comes to macros. Okay, so that's pretty much it. Don't want to overcomplicate it. And like I said, don't let it overcomplicate your trading either. I told you how I use the kill zones and the macros. It just gives me a section of time in the day to trade, and it gives me a start time for the day as well. That's it. It doesn't change whether or not I get in. It doesn't make me feel like some concepts are invalid or not. No, it just gives me some time parameters to trade. No, that's exactly what I'm saying I don't do. That's exactly what I'm saying. If there's no displacement in the macro, that doesn't change whether or not I trade. That's what I'm trying to tell you. All it does is give me parameters of time that I'm gonna trade. I'm not gonna trade before 9:50 a.m. because that's before the first macro of the day. I'm not gonna trade outside of the AM session kill zone because the AM session kill zone is when we're supposed to have the best price action. That's it. That's all that I personally use it for. I want to see displacement in the macro, but if it's not there, I'm not going to sit out because it's not there. That's all I'm saying. But yeah, the more important time thing that we're going to talk about today is open high low close and open low high close. That is the most important thing that we're going to talk about, and we're going to talk about it right now. Okay. What is that, bro? What the? How does he have boobs? Bro! What is up with this fly? Actually. I've said this like 7 times, but how retarded do you have to be to fly on the face of the only thing in this room that can end your life? What are you doing, bro? What are flies' purpose? Like, why are they on this earth, bro? I don't understand it. I don't get it. Don't you enter on displacement? No, I don't enter on displacement. I enter and then there's displacement. If a candle displaces to the downside, I'm not going to enter on that, because it'll more than likely get recovered. I mean, that's just logical, though. Like, if I want shorts, or right here, let's say, I mean, longs didn't end up holding, but if I wanted longs and this candle displaced all the way up here, why would I enter at the peak of the displacement? That doesn't even make sense. Is that what you're saying? You're saying I thought I entered on displacing candles like this? No, displacement is not the same as a retrace. Displacement is just an aggressive move in the market. That's it. It can be up or down. It can do whatever. A displacement is just an aggressive move. Let's look up the word displacement. All right, it doesn't say anything about aggressive, but that's how I refer to it. That's how everyone refers to it. Yeah, I enter on retracements. Retracements are when I enter on. Yeah, those aren't the same thing. But yeah, let's go back to the open, high, low, close stuff. All right, so this is when we're going to get a little bit more complex, okay? So every candle, people use open, high, low, close, and open, low, high, close mainly on the daily, but every single candle in the market, including the 1 minute, the 5 minute, the 30 minute, they all have an open, they all have a low, they all have a high, and they all have a close. It even says it up here. Open, high, low, close. It's all up here. Okay? Bro, you guys are brain dead. So, obviously, there is time correlated with open, high, low, close, and open, low, high, close because it's the start of candles. So, you can utilize this to understand where the market actually wants to go, for one, and two, help you find entries, okay? So, like I said, a bearish candle is going to be an open, high, low, close. Why is it an open, high, low, close? Because we open and manipulate up to form the top wick, and then get the push lower. This is the peak low, and then we retrace to close. Every candle does this. And then a bullish candle is going to be an open low to put in the wick, manipulative move to put in the wick, and then a high, or the high up here, and then the close. So typically what that looks like, and this is, like, let's think about the daily candle here. So we know that Asia typically accumulates, right? So this is Asia session. And we know that London, even when it comes to daily profiles and things like that, the best setups are typically going to come from a manipulation. So manipulation down during London, or maybe even during New York. Maybe we got an AMD setup where we accumulated in London and then got the manipulation at the start of New York. Regardless, we accumulate around the daily open, we manipulate from the daily open, and then we get the push up towards our drawn liquidity, and then we get a retrace on the day. Are you seeing the daily candle? Manipulation equals retracement? It's not the same topic. Like, just stop trying to put terms together. Just let it be what it is and understand them for what they are. Those two things don't, like, all right, I'm just going to move on. We'll talk about it later. So, like I said, to form a bullish daily candle, the candle opens here. You get a push down, a manipulation down, and then you get the push higher to a draw on liquidity, and then you get a retrace to put in the top wick. Okay? We haven't talked about PD arrays yet, but you guys know what they are. Things like fair value gaps, order blocks, breaker blocks. If you don't know what they are, we will talk about them in the future, so don't stress it too much. Just think about this for what it is. We accumulate at the open, we manipulate at some point, and then deliver a draw on liquidity, or just go up to put in the bullish move, to put in the bullish body, and then retrace to put in the top wick. This is the structure of a daily candle, or every candle. This is the structure of every candle. Manipulation is not, manipulation can be filling an imbalance. Manipulation is not specifically filling an imbalance. I mean, think about what manipulation is. Like your ex. You got manipulated by your ex so that he can get some things out of you, and then he ran away, right? So consider this move right here the manipulation that your ex did to get whatever he wanted out of you, and then this is him running away. Okay? So hopefully, maybe that'll actually make sense. Maybe this time it'll make sense. Okay. So, but for people who don't know what PD arrays are, like fair value gaps, order blocks, breaker blocks, like I said, just think about this for what it is. It's an accumulation. It's a manipulation, which is just a move away from the direction the market actually wants to go. This is to trick people in the opposite direction before getting the actual move up. It's the same thing as liquidity. Like, this move generates liquidity and makes room for big money to get in, because this move down stops out long orders, and it convinces people to also go short in the opposite direction. So that's what the whole point of the manipulative move is. It's the same thing as liquidity, or it's the same like thought process as liquidity as to why we do it. And then the move up is the actual move, and then we get a retrace on the day. That's how you form a candle. Okay. For the people who do know what PD arrays are, you want to see the manipulation go into a high time frame PD array, or just a high time frame key level. That can be order blocks for value gaps, breaker blocks, whatever. You want to see the move from the accumulation go into a key level. Okay, so when you see this candle open, when we're putting in that wick, you want to see the wick get put in at some sort of key level, and then that will start the move, the distribution. Bro, how did that fly get away? That'll start the distribution, and then this, typically you want to see the top wick of a bullish candle hit draw on liquidity, and then that starts the retrace. This is the structure for a daily candle. Ariana, I'm gonna be honest, you're focusing on the wrong things right now. We can talk about that stuff later. That's not what we're talking about right now. We'll talk about it at the end. But yeah, this is the structure for a daily candle. And obviously for a bearish candle, you just flip it. So actually, hang on. We'll do this next to the bearish candle. So we accumulate, and then instead of manipulating down, we manipulate up for a bearish candle. We want to move in the opposite direction of where the market actually wants to go first, for the same reasons I just told you. Us going up stops out sellers, creating room for big money, and then us going this way gets people to go in the other direction, creating room for big money. Okay? And then you want to see the move to where the market actually wants to go, and then once we book what the market actually wants to go, you want to see a retrace. So that puts in the top wick of the bearish candle, that puts in the body, and that puts in the bottom wick of the bearish candle. Okay? So that is a good structure for a daily candle, but like I said, this applies to all time frames. The place that I use this the most is at the 10 a.m. candle and the 2 p.m. candle. The reason for that is because that time frame, those two times specifically, are the two openings of the 4-hour candles. So when the 4-hour candle opens, every other time frame below it is also that candle's open. So let's say hypothetically this is the 10 a.m. 4-hour candle open. That is also the open of the 1 hour, the 15 minute, the 30 minute, the 5 minute, the 1 minute. Every single candle below the 4 hour opens at that time. So it's a significant time. It's a good time to pay attention to. And typically 10 a.m. is when news drops as well. So it's just a good time to watch for manipulation. So that's how a lot of people use it. Like, for example, if you're in the market and you want to go short, you would want to see 10 a.m. open and manipulate up because you're wanting to see a bearish 4-hour candle form. And like I just told you, if you're wanting to see a candle go bearish, you're going to want to see it manipulate up first. So you apply that not only from the daily, you also apply it to the 10 a.m. and the 2 p.m. on the 4-hour chart. So you want to see that manipulation before the move down because that is the start of every candle. Every candle has an open, high, low, close. So if you want to see a bearish candle, you want to see an open, you want to see a high, and you want to see a low and a close. Then obviously this the opposite for a bullish scenario. If you want to be bullish going into 10 a.m., you want to see 10 a.m. open, drop, and then start the actual move. And then if I'm being honest, I don't even worry about the wick at the end of the candle. You just want to watch for this main part if you're wanting to be bullish. If you want to be bullish, you want to see an open, you want to see a push down, a manipulative move down before the move actually happens. But if you're wanting to be bullish and we open and we start with a significant move to the upside, it's typically not going to set up the way you want because you want to see the manipulation first. It can just go without a manipulation, but more often than not, you want to see that manipulation. So it might not make sense now hearing this like in words. So if you need to, rewatch this, but now we're going to show on-chart examples, and it will probably make a lot more sense. So let's get into it. Are you going to do a video on different time frames? Price is fractal. So I don't need to do a video on time frames because everything that happens on the daily happens on the hourly, happens on the 15-minute, happens on the 5-minute, happens on the 1 minute. Do I use it for 6 a.m.? I don't trade at 6 a.m. So no. But yeah, So like I said, it happens on the 4 hour. Bullocks? What are you saying? What is, bro? Are you guys insinuating that I do trade at 6 a.m.? You know I don't trade at 6 a.m. All right. Anyways, bro, I don't even. Yeah, I'm just gonna continue with this, and we can talk about this later. So let's find, for the past couple days, let's find 10 a.m. and 2 p.m. Okay, here's 10 a.m. Bullocks. We'll look at 10 a.m. first. So, really, like I said, the open of the 4 hour is also the open of every time frame under it. So I'm mainly looking at the 1 hour because I'm an intraday trader. I'm not going to be sitting here holding a trade for 4 hours. You know what I mean? So I don't really need to worry about that. I'm more so looking at the hourly open at 10 a.m. and 2 p.m. Okay? So here, I'm forgetting if I wanted to be bullish or bearish this day, but let me see. Bearish. I wanted to be bearish this day. So here, this right here is the 10 a.m. open. I'm actually going to make this one instead. Okay, this is the 10 a.m. open. So for me, like I said, this day I wanted to be bearish. So what do I want to see when 10 a.m. opens if I want a bearish 10 a.m. candle? I want to see a move up first. So that's exactly what happened. 10 a.m. opened, moved up first. I'm pretty sure, did that do an SMT or no? It didn't form an SMT, but it did form a failure swing. That's something we will talk about later. Failure swings and breaker blocks are the strongest form of reversal in the marketplace, so we will talk about that later. But we did push up and we formed a failure swing, okay? And then from that, we displaced back under 10 a.m. open. Obviously, price is really choppy, but we never revisited the peak of that manipulative move at 10 a.m. again. So 10 a.m. open, manipulated, and today was just choppy, so we did chop around this day. But then eventually, we got the drop. And actually, hold on. I don't think the 10 a.m. closed bearish. Did the 4 hour close bearish? I don't really care if it did. That day was really messy, so I should probably look for a better example. That day was super messy. What about today? Let's see. Okay. Before I even drop down in time frames, look at the candle. This looks like the example that I just drew up. 10 a.m. opens, gets a manipulation up to form the wick, and then we drop. We deliver the draws in liquidity right here, which is previous day's low, and then we retrace and form the bottom wick. That's exactly what I drew up and exactly what I told you. So now let's look at it on smaller time frames. So here, like I said, if you don't understand what PD arrays are yet, don't worry about the things I'm saying like fair value gaps, order blocks, and things like that. Just focus on the fact that the open happened and then we pushed up and manipulated up and then got the move. But for people who do know what PD arrays are, here, if you're bearish, you expect this 5-minute order block to hold without question. So at 10 a.m., we pushed up and manipulated. The manipulative move right at 10 a.m. was into the 5-minute order block. And I'm sure if you drop on the 1 minute, there's like some 1 minute for value gaps or something like that. But regardless, the manipulation went into a key level. The manipulation went into an order block, and then that started our descent for the hourly candle that took out data lows, took out London lows, took out previous day's low. And then we got the retrace and closed here. I actually want to mark this out so it'll be pretty clear. I love bad bitches out. Get to the bag. All right. Oh. Okay. And then what I want to do is mark out the draws on liquidity that booked. So this right here that right here is the retrace from the draw on liquidity that I told you about. That puts in the bottom wick of a bearish candle. So we had the bearish move, book the draw on liquidity, and then start the retrace to put in that bottom wick. This is the bottom wick. Where did we put in the top wick? On the push into this key level, order block. So this right here is your top wick. Okay. I don't even remember what color my freaking halfway point was. So you should be able to see the candle now. This is your candle. The in between between these two blocks is your candle's body. It's the 10 a.m. candle's body. This is your top wick. This is your bottom wick. The top wick manipulated at 10 a.m. open into a key level, this 5-minute order block. Then we got our descent, putting in the body, and then once we booked our drawn liquidity, which was previous day's low and these relative equal lows, we got to retrace on that move to form the bottom wick. This is your candle. So you can utilize that by doing what we did here. So you know, realistically, if we are going to short, and so far we're setting up beautifully for shorts, we shouldn't disrespect this 5-minute gap. So you would want to see 10 a.m. open and go into this 5-minute order block because you want to see a manipulation up first before going down. So you can use that to either limit order this order block, or you can find some sort of entry after the reaction from the order block. So that's one way that you can get an entry off it. Another way, it's a little bit more risky and it's not as clean, is you can still enter as we're making our way down to the drawn liquidity. So as we're moving down, I mean, we didn't really get any entry here, like we didn't pull into this for value gap, but we already got the manipulative move to put in the top wick for the bearish candle, and you also know that we haven't booked our drawn liquidity to the downside yet. So if the drawn liquidity isn't booked, and you know we already put in the manipulative move to the upside, it's logical to expect this 5-minute gap to hold. So that's another way that you can enter. You can enter off this 5-minute gap and wait for the drawn liquidity to book. So that's a bearish example. That's fine. Or I guess you guys want to ask any questions before I show more examples? All right. Doesn't seem like it. Give me more. Wow. All right. All right. So let's find a bullish example. Got to find a bullish 10-hour candle or 10 a.m. candle, but you can see this example on the for the bearish side. 10 a.m. opens, manipulates up into this order block, and then the candle delivers. This day it delivered this 1-hour gap and then the midnight open. So you can see that. But I want to find a bullish example, which is going to be hard because we've been so bearish. Here we go. Here's a bullish candle. Okay. So the retrace on this one wasn't deep at all, but this order block is here on the 5-minute. So let me make this lighter. So this is a bullish example. So 10 a.m. opens. The manipulation isn't huge, but we do manipulate into this order block. You would prefer that we get into this for value gap, but we did get the manipulation, and then we got the displacement away from it. And the draw on liquidity is right here. Equal highs. So 10 a.m. opens. You want to see 10 a.m. manipulate down into some key level. The key level in this scenario was the order block, and then we get the delivery to the drawn liquidity, and don't really get a retrace to put in a top wick. That right there is your top wick, but it's not like anything significant. But still, like I said, I never really care about the closing wick. I'm more so focused on the manipulation at the start so that I can capitalize on it. Because if I am bullish and we do get the manipulation down at the open, then I can feel more confident that we are going to long. So I'm basically teaching you how to not get manipulated in the market. Unfortunately, I can't stop you from getting manipulated in your love life, Ariana, but at least we can stop it somewhere. And this is where it starts, okay? So, yeah, this is a bullish example. I wish it was cleaner. Like, I wish we pushed deeper into this fair value gap so it was cleaner. But it's the exact same thing. So, open, manipulation to the order block, and then distribution to the upside to the drawn liquidity. Let's see if we can find another example that's a little cleaner. Because I love bad bitch that. Track hog going fast in it. And my pockets look like I stuff sexy red ass in it. We'll do another bearish example. Actually, no, because that wick is so small, you can just tell we didn't really do anything. I want to show like a really, really clean example. So let me see. Get fucked on, stupid! Oh, shoot. Wait, hold on. I finally killed that stupid fly, bro. I had to smack my PC to do it, though. If you entered at 250 start of macro, surely that means you can get manipulated at 3. If your entry is solid, bro, I mean, it's hard to describe, but like in a way that someone who knows nothing would understand. But the manipulation doesn't mean like, all right, here's an example. Okay, so let's say this is 950. You caught a short here at 950. Then we start the move down. This is 10 a.m. This move up at 10 a.m. can be the manipulation. So this is a fair value gap. 10 a.m. opens, manipulates into this fair value gap. Then we start the descent. But realistically, even though I said in my rule book I don't trade prior to 950, I also typically don't trade prior to 10. It's not my intention, but typically the setup forms after 10. So that's usually how it goes. But let me see. Bro, how is there another fly? I just killed one. I see his corpse right here. Oh my god. It's like a never-ending nightmare, bro. Okay. This one has more of a wick to it. Stop killing the flies? Bro. If I could click a button and make all flies go extinct, I'd be a happy camper. I wonder if that would like secretly end the world and I just don't know. Okay. Obviously this 1 hour candle's bullish, right? So let's drop to the 5 minute. Why is this so zoomed out, bro? Okay. So, I remember there being an SMT this day to the downside. But regardless, 10 a.m. opens. Here's 10 a.m. open. Manipulates down. Let's assume we wanted to be bullish. I'm not going to do a full-on analysis as to why we should have been bullish today. But let's assume we should have been bullish to this high. Oh, well, easy. This is Asia high. So we're bullish because we want this Asia high. 10 a.m. opens. We do mess around a little bit up here, but the real manipulative move goes to the downside. Because this is what I'm saying. This is why the manipulation has to go into a key level. Like right here, we opened and we went up, but we didn't go into any key level. So that's not like a manipulation I'm really paying attention to. But this move down went into a key level. It got the sweep, and I'm pretty sure it got an SMT. I don't know why I'm not seeing it. Oh, here it is right here. So NQ took this low, ES didn't. So it went down, got a sweep, and got an SMT. And like I said, let's just, for whatever reason, assume we're bullish. Okay? So we get back above 10 a.m. open, and now we have this 5-minute fair value gap. That can be your entry. Boom. Sends us up. And we don't deliver that high within the hourly candle, but it does get delivered. So that's literally like a textbook setup right here. Okay, 10 a.m. open. This is the manipulative move into the key level, which is the sweep in this high time frame SMT. We get displacement from the SMT. Form a fair value gap, inverse of fair value gap, free entry. You can take partials at this high, boom. But you're seeing it. You're seeing the formation. You're seeing the manipulation down before the move up. And yeah, man. I mean, that's pretty much how it goes. I showed quite a few examples. So obviously, after every single class, you should be looking for your own examples in live charts or just in previous price action. It's just something you should always be doing. Bro, what are we doing? Holy, bro. What are we doing? Jesus Christ. But yeah, I mean, I feel like I explained that pretty well, showed a couple examples. So if you still don't understand it, I'd rewatch and then also just look for the examples yourself on the chart. But does the Discord have any questions? No. Like I said, write this sentence in your notebook. I said this at the start. This is what a macro is. It's a pocket of time where we move aggressively to fill an imbalance or take liquidity. Okay? Write this down because this is the 5th time I said it, and I even emphasized it the past 2 times. Write this one down. Okay? I'm going to say it one more time. A macro is a pocket of time where we aggressively move to fill in an imbalance or take liquidity. That's the one. That's it. Can it be a manipulative move? Yes, it can be. Does it have to be? No. I don't know why, Ariana, I don't know why you keep trying to tie words together, like force them together. Like you're trying to tie manipulation to something, you're trying to tie retracement to something. Just let them be what they are individually and use them together. Like that, they don't have to be linked to each other. Bro, ChatGPT goes crazy for you guys. Jesus Christ. Do you think we take out those highs from Friday? I'm not going to talk about that right now. I'm talking about questions specifically to what we talked about today because this is for recording. Dang, this class ended up being an hour? Jesus Christ. Yes, macros, big boy moves. Alright, I'm not going to lie. I'm actually going to end this now because this is actually super long. Jesus Christ. Bye, YouTube.